Greetings everybody. Let's quickly have a look at US2000.
We are on the monthly chart, as you guys can see,
and we can see that we had a very W structure at that,
which is actually an overextended W structure,
which has a neckline at that level more or less, and we saw price breaking to the upside of that neckline and then coming back to test that neckline, and at this point we actually expect the market to move further up, right? And that is because, guys, you know by now that when we have W structures, we want to see the price break above that neckline and then come back to test the neckline and then push further up, right? So as much as that's the case, just also bear in mind that we have this candlestick over here, which is a liquidity candlestick, which tells us that at one point or another the market needs to reach this level to grab that liquidity, because liquidity represents money that needs to be triggered by the market, right? So let me just actually add a neckline to that W structure, because it'll be very important as we move further down to the smaller time frames. Let's see. So there goes our W structure, the neckline of the W structure rather. There we go, right? And I'm also going to make sure that I mark that candlestick that is carrying all of that liquidity. At this point, it is not so important. We will only consider this candlestick once, or should the market close below the neckline which we have on the monthly chart of this particular index, which is over here, right? Anyway, let's proceed. I'm also going to utilize the Fibonacci retracement tool. I want to see if that neckline aligns with any of the key numbers to confirm that indeed we should be looking for buying opportunities. So just bear with me, guys. Let's see. Right. I hope you guys can see that the neckline of this W structure aligns with the 50% Fibonacci retracement level, and as I said, we should, I think, indeed be looking for potential selling opportunities at this level, as the anticipation is for the market to push further up, at least to this level over here, right? Let me just delete this tool. So why do I say that the market should push to at least this level? That is because at this level we have a very nice M structure, and this level also serves as a very strong level of resistance, and it's also the neckline of that M structure, and at this point we might potentially see price move further down, right? As much as that's the case, we also have at this level these two candlesticks, or rather this one candlestick, which aligns with the neckline of that M structure, which is actually a liquidity candlestick, and it tells us that the market needs to grab some liquidity at that level at one stage or another, right? I'm just going to add a neckline to that M structure as well, because it is also very much important. Just bear with me.
So there goes the neckline of that M structure, as you guys can see. So can you guys also see that in regards to this M structure, price broke the bottom side of the neckline and then went up to test the neckline, which means that we would have looked for selling opportunities at this point, and we saw price move down to this level to test the neckline of this M structure. Can you guys see that? Yeah. So let's continue.
What else do we see on this?
We should be paying attention to. I don't see much really, so let's get down to the weekly chart. And here,
weekly chart. So what do we see on the weekly chart that is
interesting, or that we should be paying attention to? On the weekly chart,
can you guys also see that we had a smaller M structure over here, which has a neckline at that point, we saw price breaking to the bottom side of that neckline and then heading back up to test the neckline and then push further down, meaning that we would have looked for selling opportunities at this level. And just remember that necklines are an area and not so much an actual line, right? What else do we see? Another thing that I see is that we had a bigger W structure at this point, which had a neckline at this level. Price broke to the upside of that neckline. However, the neckline of this W structure was unable to hold price as price came back to retest it, right? Which meant that, or rather, which means that this entire W structure became irrelevant. To add to that, we also had a smaller W structure at this point, as you guys can see, which has a neckline at this level more or less. We saw price breaking to the upside of that neckline and then coming back to retest it, which means that we should have been looking for possible buying opportunities at that level, right? We should have been looking for possible buying opportunities. So as much as that's the case, and in fact, before we proceed, I'm just gonna add a neckline also to that smaller W structure. It's very much important. There we go. Right, there we go. The next thing that I'm going to do is also utilize the Fibonacci retracement tool just to see if that neckline aligns with any of the key numbers that we have on the tool. Let's have a look. In regards to this W structures neckline, we can see that price came to test the 61.8% Fibonacci retracement level and it held. Why do we say it held? That's because price, or this particular bullish candlestick over here, did not close below this level over here. It closed above it, although the wick went below the number, which means that the 61.8% Fibonacci retracement number is still very much relevant. Anyway, let's proceed. I'm just going to delete that Fibonacci tool. So that is confluencing as far as looking for buying opportunities at this level.
Said that, guys, as much as I'm saying that we should be looking for potential buying opportunities at this point, we need to ensure that we are up to speed in regards to what's happening with the news, right? Fundamentals this week have been very bad, and I think to a certain degree they may have ruined some of our analysis.
Nonetheless, that's part of the game. That's what happens. We just need to ensure that we are ready for whatever happens in the market in as far as fundamentals go. Anyway, let's proceed. Right. So what else do we see? So we also have this candlestick over here, which is a liquidity candlestick at this level. And remember, guys, that I'd said because we have a W structure over here, right, and
that when it comes to W structures, people usually buy on the second leg of a W structure and place the stop losses just below, right? So there is scope for the market to actually push further down as opposed to bouncing off this area and going up. There is scope for the market to push further down, to grab the stop losses that are located just below here, and also
to grab the liquidity that's associated with this particular candlestick over here, right? Nonetheless, the bias at this point in time is for price to push further up from this level, and that is because we have the W structure, we have the neckline of the W structure, and we have price coming back to reject at the W structure, or rather at the neckline of the W structure. And to add to that, we have the neckline aligning with the 61.8% Fibonacci retracement level, right? So myself, I would buy at this point and use good money management, and my take profit would be this level over here, because that is the neckline of that huge M structure that I spoke about. And to add to that, we also have this candlestick, which is a liquidity candlestick, which tells us tells us rather that the market needs to reach that point at one point or another. Anyway, let's proceed. From here, I'm just going to head down to the daily chart. Let's have a look. On the daily chart, I'm going to start off by adding my daily channel. Let's see. How would I add my daily channel here? Let's see. Just bear with me, guys. So there goes my daily channel, more or less. Let's see. There we go. Right. So let's proceed. So what else do we see on this chart that we should be looking at? Another thing that is very much important or very much interesting is the fact that we had a head and shoulders pattern at this level, which had a neckline at that level, which actually explains why price rejected at that point, and that is because we saw price break below the neckline of that head and shoulders pattern and then going up to retest the neckline of the head and shoulders pattern, and this is where we should have potentially looked for selling opportunities. And that is because as much as this level is the neckline of that pattern, which is the head and shoulders pattern, it is also a very strong level of resistance because we had multiple rejections at that level. As you guys can see, right, we had multiple rejections at that level, right? To add to that, there's also a very big chance that this level aligns with one of the key numbers that we have on the Fibonacci retracement tool. Let me just actually add a line to that level. So there goes the neckline, more or less, right? I'm gonna add the Fibonacci retracement tool, so just bear with me. There we go. Right, so we can clearly see that the neckline of this head and shoulders pattern, actually aligns with the 61.8% Fibonacci retracement level, which confirms that indeed we should have looked for possible selling opportunities at this level over here. Right, I'm just going to delete this and we're going to proceed. Right, so what else do we see on this chart that we should be paying attention to? Another thing that is also very much interesting is the fact that we have another W structure at this point, which has a neckline at that point, right? And similarly, we saw price pushing to the upside of that W structure and then coming back to retest it, and we saw price rejecting at that point, as you guys can see, and that is because, or rather, price rejected at that point and created a pin bar, which was actually confirmation for us to buy. However,
see that the next candle has a very strong bearish candle, which means that that particular pin bar, which was a confirmation to buy, was actually a trap in
we were induced to buy, hence we saw the next candlestick coming down again to the same level to trigger some stop losses. Anyway, let's proceed. I hope what I'm saying makes sense. I'm just gonna add actually a neckline to the W structure as well. There we go, more or less. And remember guys that necklines are areas and not so much lines. There we go. Right, so as I said guys, we had this W structure and the neckline over here, and this bullish candlestick over here was a trap. It was a fake move to induce us to buy, right? So that we can just place our stop losses just below, and the next candlestick came back to trigger all of our stop losses, right? Let's see. So from here, what I'm gonna do is head down to the daily chart. Sorry, the H4 chart rather. On the H4 chart, I'm just gonna fix my lines. Let's see. There we go. That should be fine, right? There we go. Right. So here we are on the H4 chart, guys, and on the daily chart, I spoke about how we have this W structure, which has a neckline over here, and I spoke about that candlestick that gave us a false confirmation, because the anticipation at this point was for the market to push further up. However, we saw price only reaching around this level and then coming back to trigger all of the stop losses that are sitting below here, right? Because a lot of people bought at this point because they saw this W structure, they saw this neckline, and chances are that this neckline aligns with a very key Fibonacci retracement number. So let me just check it out.
Let's see. Alright. So we can see that actually the neckline of this W structure aligns more or less with the 61.8% Fibonacci retracement level. So a lot of people saw this, right? And as I said,
to retest the level, and people expected price to move further up. However, that was a fake move, hence we saw the market afterwards pushing strongly down, right, to this level to trigger all of those stop losses, right? So what is likely to happen is that the market will form
a W structure
and push further up.
Yeah, in my humble opinion, right? However,
we need confirmation. Just buy without confirmation, but what's likely to happen is that the market will at this point reverse and push further up to around this point, right, and create this very nice W structure, right? So myself, I would buying opportunities at around this level, right?
And my take profit should be this level, right? And that's because we would be having this W structure. That is it in as far
my analysis of US 2000 goes. Peace out.